let's unpack this. It's a real puzzle, isn't it? Tesla, a company that's always in the news, reports its profit absolutely plummeted.
Yeah?
Down, a massive 71% in the first quarter of 2025.
71%. I mean, that's a staggering number.
It really is. And, typically you'd expect the stock to just tumble.
Right.
But instead it actually climbs. So what's the story? What's going on underneath?
Well, it's this apparent disconnect, isn't it, between the fundamental financial performance and how the market's actually reacting. It just kind of underscores that stock prices aren't just about past results.
Exactly. So for this deep dive, we're looking at a recent piece from Bankrate. It's called Tesla's Profit Sinks 71%. But the stock rises as Elon Musk makes key decision.
Okay.
Written by James Royal, PhD, published April 23rd, 2025. And our goal today is really to get beyond those surface numbers.
Right.
Try to understand the core drivers behind the financials and that sort of surprising market response. And we're really focusing on this key decision by Elon Musk.
Yeah, and what that might mean going forward really begs the question, what specific piece of information did investors grab onto that overshadowed such a dramatic profit drop?
Okay, well, let's start laying out that financial picture a bit more. That 71% year-over-year profit drop is, as you said, staggering. But the Bankrate analysis also points out overall sales saw a pretty big decline too, 9% in the same period.
9% overall.
And here's a really striking figure, car sales specifically. They plunged 20%.
20%?
Yeah.
Just on cars. Wow. If you connect that to what analysts were expecting, I mean, these aren't small misses.
No.
A 20% drop in car sales. That signals some serious headwinds for their main business, right?
Absolutely. And the report goes even deeper. It notes Tesla's first quarter deliveries actually missed analysts' projections by 14%?
14% short on deliveries.
Yeah. And in fact, those delivery numbers were the lowest they'd been since, the second quarter of 2022.
Okay, so quite a while back. That really gives you a sense of the scale of the slowdown.
It does.
So it seems like Q1 2025, just across the board, presented some pretty substantial challenges for Tesla. Fundamental financials, number of cars moving.
Right.
Which makes that stock price jump even more of a, head-scratcher.
You've hit the nail on the head. It's totally counterintuitive. Negative financial news usually pushes prices down.
Usually, yeah.
So what was the catalyst? What caused this unexpected positive turn? The Bankrate piece points directly to Elon Musk's key decision. That seems to be the driver.
And this key decision, as James Royal's analysis emphasizes, it wasn't about, some amazing new tech.
No.
Or fixing a big production problem.
Yeah.
It was all about how Musk is going to spend his time.
Precisely. The Bankrate report explains Musk announced a significant reduction in his time at the Department of Government Efficiency, DOGE.
Right. And for anyone maybe not following Musk's non-Tesla activities super closely, it's worth understanding that his role there at DOGE, and especially his connection to former President Trump, had become a real source of anxiety for, a lot of investors.
That's right. The article specifies he plans to cut his DOGE time down to just 1 or 2 days a week for the rest of Donald Trump's term. And this shift is expected probably starting around May 2025.
What's interesting there is that it directly addresses concerns that people like Wedbush analyst Dan Ives.
Yeah, the Tesla bull.
Exactly. He'd been publicly saying Musk needed to change course, needed to refocus.
Yeah.
So the market seems to have read this as Musk is finally prioritizing Tesla again.
But here's where it gets really, really interesting. The Bankrate analysis digs into why investors were so worried about his divided attention anyway.
Okay.
And a huge factor seems to be the negative reaction from consumers to his political stuff.
And the report actually shows evidence of this, right? It's not just worry, it's hitting actual sales.
No kidding. In March 2025, Tesla car registrations dropped by high double-digit percentages in key European places. We're talking France, Norway, Denmark.
Well, those are important markets. That's a serious downturn.
It is. And it wasn't just Europe. The Bankrate piece also flags a massive 49% drop in Tesla shipments in China in February 2025.
49% in China. That's their second biggest market, isn't it?
Exactly. So that's a really, really concerning trend.
Yeah.
And it wasn't just overseas. The Bankrate report mentions consumer backlash in the U.S., too. Things like boycotts, even disturbing reports of vandalism, people damaging Tesla cars.
Gosh. That indicates a really strong negative feeling among some buyers or potential buyers.
It does.
But it is important to point out, and the Bankrate article does this too, this isn't necessarily people turning against EVs altogether.
Good point.
In fact, EV registrations in Europe actually went up over 30% in January and February.
Right.
So it strongly suggests consumers are specifically shying away from the Tesla brand, likely because of these issues around Musk's political ties.
Okay, so Musk spending more time back at Tesla. That might reassure investors a bit in the short term. But the Bankrate analysis brings up this critical point about key man risk. Can you explain what that means here?
Sure. Key man risk is basically the danger a company faces when its success depends way too much on one single person.
Right, like Musk at Tesla.
Undeniably. And while him focusing more on Tesla might seem like a good thing now, the basic problem, the thing causing the negative brand image.
His DOGE and Trump connection.
Exactly. That hasn't just disappeared.
Right. As the Bankrate report points out, the damage to Tesla's brand might already be pretty significant. And even with Musk back more often, the reasons for the consumer backlash are still there, which suggests, ongoing reputation problems, continued impact on sales.
And this brings us to that crucial question of valuation.
Yeah.
Because even with the big drop from its peak back in December 2024, the Bankrate article really emphasizes that Tesla is still seen as hugely overpriced by conventional valuation measures.
Right. So even with this recent stock pump, the underlying financials, the standard ways of valuing a company, they don't necessarily support a big sustained rise just because Musk is spending less time at DOGE.
And it's interesting how Musk seems to be kind of shifting the conversation back to the future, isn't he?
Always.
Talking a lot about things like robo-taxis. Supposed to be coming in volume in 2026. Humanoid robots. The Bankrate report even hints this could be a way to, height the stock.
It's a familiar playbook, maybe. Talk up the future when the present looks a bit rough.
Could be.
But the Bankrate analysis adds another layer of caution here, pointing to what company insiders are doing.
Yes. The fact that Elon Musk's brother, Kimmel Musk, sold almost, $43 million worth of stock between November 24 and February 25.
Yeah.
And that he's apparently only one of several insiders selling shares. Well, that definitely raises eyebrows.
How so?
Well, insider selling can sometimes signal that people inside the company don't feel super confident about the near-term prospects, at least not at the current stock price.
Okay. So, putting all these pieces together from this Bankrate deep dive, the conclusion seems pretty cautious for Tesla investors.
Seems that way.
Despite the market liking Musk cutting back at DOGE, you've still got this arguably inflated stock price. His ongoing connection to Trump, the insider selling, it suggests there are still considerable risks.
Yeah, the core message from Bankrate feels like Musk's decision gave a temporary boost, maybe.
Right.
But it hasn't fixed the consumer backlash or the high valuation, that key man risk linked to Musk, both the good parts and now maybe the bad parts. It's still a huge factor for Tesla.
Okay, so let's just quickly recap our deep dive into this Bankrate article. Tesla. Big profit drop, significant sales decline in Q1 2025.
Yeah.
Stock price, surprisingly, goes up. Seems mostly driven by Elon Musk saying he'll spend less time in the Department of Government Efficiency.
Right, the market likes that perception.
But the report stresses there are still big worries. Brand damage from Musk's politics, a potentially overvalued stock, and insiders selling shares.
Precisely. The market reacted to the idea of Musk shifting priorities back to Tesla. But the fundamental challenges, especially consumer feelings and that high valuation, they haven't just vanished.
So, given this really complex mix, you've got financials, executive moves, consumer feelings all tangled up. What do you see as the biggest long-term hurdle for Tesla? Thinking about their continued success in this EV market that's getting more crowded all the time. Consider the brand impact, the valuation pressure, the constant need to innovate against competitors. What's the biggest challenge ahead?